following our webcast. Maybe we can have the first slide, Jonathan, so we can kick off. Yeah, we have a full agenda today and a couple of speakers who will introduce themselves as we go along. So I will just take you briefly to the agenda and have a few more generic messages, and then we'll start off. I'll give you some background on CBAM and where it sits in the Green Deal package. Then we'll talk about the mechanics of CBAM. We'll focus on the customs and reporting part in detail, and then we'll discuss a couple of no regret actions and actually what CBAM will entail after 26, which seems to be far away, but if you think of the impact on the value chain, it's actually just a few steps away. And then we'll wrap up with a couple of short conclusions. In terms of generic messages, please mute your microphone. We have quite a few people on the webcast, so if you do have questions, please submit them through the chat function. And if we do run out of time, we'll make sure to get back to you and answer those separately. This session will be recorded, and obviously, as a big accounting firm, we have a disclaimer, and that's that the content of this webcast is for general information purposes only, and it's not a substitute for consultation with professional advisors. Obviously, we try to give you a broad overview of what's happening, but as you will see when we go along, there's quite a lot of detail here, so please bear that in mind. Then probably good to go to the first part of the presentation, which is a bit of background on the EU Green Deal and where CBAM sits. So back in 2019, the Commission has set out its plan, dubbed the EU Green Deal, and this is the aim of becoming the first climate neutral continent by 2050 and reducing emissions by 40% by 2030. Now, in order to arrange all of this, the Commission has launched the Fit for 55 package. And that's a broad package of proposals that provide for new legislation in addition to the existing laws. Now CBAM is an important part of that. The CBAM broadly applies to the price of carbon emission embedded in certain goods which are imported into the EU. And it's effectively a measure by the Commission in order to avoid carbon leakage. Importing from jurisdictions where there's a lower or no carbon price, which would distort the European market. And it's very strongly linked to the EU ETS system, so the emission trading scheme in Europe. And that applies to a broad range of installations and industries throughout Europe. And as you may have seen, that price has picked up dramatically in the last couple of years, from hovering around 5 to 10 euros to over 100 euros very recently. And that also covers maritime, aviation, transport industries, and the built environment since the recent changes. So I think it's an important factor to bear in mind when you operate in the EU. On top of the Fit for 55 package, the European Commission recently also launched the EU Green Deal Industrial Plan, and that caters for more simplification around the state aid rules, for example, in Europe, and the regulatory environment for the production of green technologies. And it's effectively a reaction to the US IRA, the Inflation Reduction Act, which is it's a significant stimulus package of around $360 billion at the moment. But you see that this is also spreading across other countries. China has its own stimulus package, and also Japan has recently announced a stimulus package. So at that backdrop, you can see that CBAM is in itself obviously a measure to focus on, but it's part of wider net of regulation, which consists both of carbon pricing, where the European Commission focuses on, but also on obviously the carrots, so the subsidies, which is more the let's say the road of travel that the US has taken so far. So if we go to the next slide, a bit on timeline. As I said, CBAM was one of the pillars in the Green Deal package back in 2019. It was suggested already back then. So it's not a big surprise that it came in, but it took a bit of time to agree on it. And that agreement, sort of the political agreement through the trilogue meetings, that was December last year. And then things went through April 23, where the council approved the proposal, and now from May, where we are now, to October, we still expect the implementing acts and further clarification. So just a bit of a additional disclaimer already, that not everything is carved in stone yet, and we don't have all the answers, but obviously the mechanics, the basic mechanics are available now. As of 1 October, the reporting obligation commences, so you will be forced to come up with the reporting early 2024. And as of 26, and I think that's a very important moment, you will actually need to buy the CBAM certificates. So the pricing mechanism comes in, and we'll talk about that in some further detail in a moment. And then maybe one other important date, and it might seem a bit far out, but if you come to think of it, it's a really crucial date. It's 2034, then CBAM is fully phased in, and then 100% of the embedded emissions are covered by CBAM certificates. And depending on the ETS price at that stage, that may have a very big impact on importing goods into the EU, as we will see in a moment. So I think that's for the moment the background, and Oliver, you might want to run us through some of the mechanics of CBAM and take the floor.
Many thanks, Niels, and welcome from my side. My name is Oliver Huliger, and I'm a senior manager in the Swiss Customs and Trade Practice. And within the next couple of minutes, I'll guide you through the basics of CBAM. To explain the mechanics of CBAM, we have tried to boil it down to 3 decision points, as you can see on the slide here. Before I go through each of them, I just want to note that within these steps, there are a lot of points that aren't reflected here, so much more details, but the aim of today's session is basically just to cover the broad mechanics of CBAM. When we are assessing whether a CBAM will apply to you, basically the first question you have to consider is whether you import goods into the EU, which are on the list of CBAM as currently defined. And helpfully, the CBAM regulation publishes specific customs codes. So it's based on ages classification, which Claudia will talk about a bit more in detail in a few minutes. For which goods are in scope, and it's important to understand that CBAM relates to goods only that are imported into the EU. Consequently, if CBAM goods do not touch EU territory at all, you cannot fall within the scope of CBAM, basically. Then secondly, now that I know that the goods are in scope of CBAM, I need to determine the embedded emissions per CBAM good. If the answer is yes, then you can prepare your CBAM calculation based on the actual embedded emissions. That's the ideal case. If the answer is no, which we think might be the case for lots of businesses impacted by CBAM, at least for the beginning, then you may have to rely on the default values. Lastly, you have to consider whether you're an authorized CBAM declarant or, for the transitional period, the indirect customs representative. If you are not a CBAM declarant, you basically do not have the liability to file CBAM reports at all. However, depending on your role within the supply chain, it is possible that you will get requests from CBAM declarants. So when you're the importer, you will reach out to your suppliers so that to have them to provide information so that you can comply with the reporting obligation. Consequently, this might be a kind of indirect impact for you as a supplier. And the transitional period starts 1st of October 2023 and will last until 31st December 2025. And during this time, the CBAM declarant must file quarterly CBAM reports. This transitional period is basically supposed to be a test phase for both for the authorities and of course for the business as well. And then as of 1st January 2026, as Niels just told us, the operational mechanism starts. And as per then, the quarterly reporting period changes to an annual reporting obligation. This means that CBAM declarants then must gather the information and report it to the CBAM authority no later than 31st May of the year following the reporting period. Furthermore, CBAM declarants must purchase then certificates to offset the embedded emissions. And consequently, as of then, CBAM declarants will have the financial impact by paying the price on carbon emissions. So now that we have some basic steps, let's break it down in more detail and we go to the next slide. So as I mentioned, the CBAM regulation publishes a detailed annex which lists all the goods as set by customs code that are in scope of CBAM, and Claudia will discuss this in more detail in a few minutes, but you can group these goods into following 7 categories. So we have aluminium on the list, we have iron and steel products, which also covers some downstream products such as screws, bolts, etc. Then we have mineral products, also cement, then electricity, we have fertilizers, we have inorganic chemicals, and we have hydrogen. And considering the numbers of customs code mentioned in the CBAM regulation, we expect more than 600 products to be covered by CBAM when the mechanism starts at 1st October 2023. And as a result of the categories, we expect CBAM to impact a lot of industries, as you can see on the slide. Just this is an idea from our side that what we basically see in practice, that typically such kind of industries that import these kind of goods will be impacted by CBAM. The product categories mentioned on the slide are just a starting point. That's important to mention. It is likely or very likely that further product categories will be added in the near future. For instance, we know that the EU Commission is supposed to check whether chemicals or products made of polymers will also be added on the list, and over the next years, it's likely that even additional products will be added on the list. So let's assume you assess your existing business and determine that you are indeed in scope of CBAM. What's next? You will then need to determine whether you know your embedded emissions as said before, and this is for each of the CBAM good which you import into the EU. And embedded emissions is a defined term, as you can see in the regulation. However, we are expecting more information about this in the implementing acts, which are not yet published. And embedded emissions means direct emissions released during the production of a good, and indirect emissions from the production of electricity that is consumed during the production process. And this is calculated in accordance with the methods that are set out in Annex 4 in the CBAM regulation, and it will again be further specified in the implementing acts in then Article 7, Paragraph 7. And as you can see, embedded emissions will include both direct and indirect emissions. For those who are familiar with the terms, also think about Scope 1 and Scope 2 emissions. Importantly, there is currently an exemption for iron, steel, aluminium, and hydrogen, which means that you will only need to report on their direct emissions as a starting point as of 1st October 2023. For those who are not familiar with these terms, direct and indirect emissions are also defined on the slide. So direct emissions are basically the emissions that result from the production process of the good directly. And this includes emissions from the production of heating and cooling that is consumed during the production process. And this is irrespective of the location of the production of the heating and cooling. Emissions from the productions of electricity, which is consumed during the production process of goods, and again, irrespective of the location of the production of the consumed electricity, these are defined as indirect emissions. If due to perhaps a lack of data, either your own or from your suppliers, you're unable to accurately determine your embedded emissions, you then may rely on the default values. And the default values will be assumed, will be like an assumed amount of embedded emissions to a particular type of CBAM good. And whilst we don't have a lot of details on these default values at the moment, as said, this will be published by the EU Commission in the next, let's say, 1 or 2 months. We do know this amount will be calculated based on the lowest performing installations of a similar nature under the EU ETS. So as you can probably guess, these are not going to be very favorable assumptions to be relying on. In addition, we also expect these default values to have some sort of jurisdictional or regional emissions weighting. So let's go to the next slide to check the final step. The final step in our simplified CBAM decision tree is to assess whether you will be an authorized CBAM declarant. The authorized CBAM declarant will be a party who holds basically the legal liability to file the CBAM report and purchase the CBAM certificates once CBAM becomes fully operational in 2026. And as you can see on the screen, here are like the 4 criteria that you will need to be satisfied to be classified as the authorized CBAM declarant. Claudia will define the EORI number in more detail in the next section then. Importantly, for the transitional period, it may also be the indirect customs representative that may have the liability to lodge the quarterly CBAM reports. This will be the case where you use an indirect customs broker who then already have an EORI number and they agree to accept the liability to report on your behalf. This may especially be the case in situations where a non-EU established business imports the goods into the EU and appoints an indirect customs broker for this. Non-EU established businesses cannot directly register as a CBAM declarant for CBAM purposes. And importantly, this obligation will start, we've heard it before, 1st of October 2023, which is very soon. And if you do not use an indirect customs representative, you should start having these conversations with them today. What we see in practice, and due to the fact that these brokers have a joint and several liability, it may be challenging in practice to find an appropriate partner to take on the role of a CBAM declarant. So let's conclude and say, so if we look at the decision tree, we have assessed whether your good is in scope of CBAM. That's the first point. Then we have identified whether we can rely on actual emission data or whether you have to use the default values. And we have determined if either you or an indirect customs representative have the legal obligation to register as a CBAM declarant. And then last point, file the CBAM report from January 2024, and then under the full CBAM as of 2026 also have the liability for the payment. We will go now to the next session, and I'm glad to hand over to Claudia, who is going to talk about the customs and reporting elements of CBAM in more detail. So Claudia, please, may I hand over to you? Thank you.
I had some challenges this morning with my computer. Can you hear me?
Yes, we can, Claudia, but it's breaking up a little bit. So
let me see.
If you were to maybe drop the video feed, that might help stabilize the audio.
Okay. Let's see. So let's see how it's going now. If we can go to the next slide, I will take you through how do you know which products are, when is CBAM relevant for your company, and Oliver already shortly touched upon it. if you have to determine whether or not CBAM will be running products in the, you have to look at your customs classification. Likely all of you that are in this webcast are already importing products in EU, and upon importation you have the HS. The HS code is the term whether or not CBAM will be applicable. So here you see a list of all the products that are in the regulations, and in the regulation they determine whether your products are in or out scope CBAM based on the HS classification. Normally, it's already relevant to have a proper classification. However, now CBAM is already also directly linked to the HS classification. It is even more important to ensure that your products are correctly classified. And this is something that you can already start with today. How do you classify your products? I think, Jonathan, if I can go to the next slide. There you can see that there's a huge difference in classification. So here you can see the various classifications and how it works. So for instance, screws and bolts are CBAM, but not in all cases. So if your products are screws and bolts made of steel and iron, it is part of CBAM. However, you also have screws and bolts that are used for medical purposes. If that is the case, then your products are not in scope of CBAM. So just trying how the majority of people start with and then Google, I'm going to import a screw, what would be HS code? What you can see, a screw or bolt is mentioned 4, 5, 6 times in the combined nomenclature, and not all screws and bolts are subject to CBAM. Only a part of them is. So really have a proper look at your classification to determine or not your products are in scope. And also I see some questions about the inorganic chemicals. We will share the slides, I assume, after this presentation. What you then can see is that based on the HS code, they made it explicit which products are in scope and which products are not in scope. So the classification based on the customs legislation will help you to determine whether or not your inorganic chemicals are in scope of CBAM. So the customs legislation will give a clear insight and all the rules that are there. So if you do a customs classification, you have the tariff, as it showed here on the right side. We copied a small part, but there are also basically 6 rules, general rules that you have to apply when coming to a classification, because it seems easy, but the customs codes consist out of 35,000 different codes, and classifying the products might be challenging, but we can help you. But there potentially within your firm, there are also experts that deal with customs classification on a regular basis. So that is something that you can do today, and we also suggest you to start with today, because the majority of companies have between the 10,000 and 30,000 SKUs that all need to be classified properly to determine the exact impact of CBAM going forward. If we then go to the next slide, then the question is, who can apply for an EORI number, and what is the CBAM EORI number? The CBAM EORI number is similar to the customs EORI number, but it's you have to apply for it with a separate CBAM authority. The EORI number can only be applied for by an EU company, and you can only apply for it once. The idea is that you apply for the EORI number in the country where your where you are established. So for Dutch companies, that means that you apply for the CBAM EORI number within the Netherlands. This CBAM EORI number needs to be mentioned on the import declaration as well. And as said also on this slide, it is quite easy to apply likely for a CBAM EORI number, because what you have to do is submitting your contact details as a company. So I think Oliver already mentioned that the CBAM EORI number, that the obligations that fall within the CBAM can only be fulfilled by EU companies. So if you do not qualify as an EU company based on the CBAM legislation, it is important to discuss already with EU parties whether it's your a lot of companies normally ask their subsidiary companies to fulfill the requirements. Then I think it is also quite easy to set it up in time and quite quickly. If you do not have a company within the EU, it is good to discuss it maybe with your customs broker, potentially with another service provider who is willing to represent you in this perspective. And to be honest, I see that the question was also raised via the chat. I have not seen at this point in time companies that are willing to represent non-EU companies. So I think we can also do a further research and look into it, because this is one of the series of webcasts to look into this. But I would start with having a conversation with your customers. Likely or potentially they are willing to do it during the phase-in period as of October 2023. However, now no duties become, or there's no levy, and you do not, if an incorrect declaration would be filed, there is no financial impact. However, going forward, that will be the case. And the way the reporting is set up, I'm not sure whether which company in the end will who will fulfill this gap basically on reporting, or whether CBAM will force you to set up an EU company to fulfill all the requirements. But we will get also back to that on a previous webcast. So if we then can go to the next slide, then the reporting, it's currently quarterly. If you import, you have to, your products, it will automatically trigger the CBAM reporting. That means that upon your import declaration, you have to mention also the fact that you are a CBAM importer. However, that is done on a shipment by shipment basis. The reporting is something that has to be done quarterly after the quarter ends. And that means that then you have to report the number of import transactions, the direct and the indirect emissions, and the carbon price that is paid abroad. What we've heard in practice is that a lot of companies are considering at the moment just reporting the default value, because it's so difficult to already know the direct and the indirect emissions. Because as discussed, you can start already knowing the goods imported. That is something that is legislation that's already there for a long period. You know exactly which products you ship from A to B. You know, you can know the CN code. All the regulation is already crystal clear. The direct and the indirect emissions, as Oliver already touched upon, likely it will be the scope 1 and the scope 2 emissions, but it is not as crystal clear as we hoped it would be by now. And also, a lot of you potentially need to have discussions with our suppliers to verify how they can obtain the data. So likely at this moment, since it's only reporting and there's not a negative financial consequence, likely the majority of you will start with reporting the default value. However, what Brussels did is quite unique. They have a phase-in period where there will be reporting, so you have to file the reporting, and Brussels will also monitor the reporting, but it will also, because there's not yet a final interest, it is your period in which you can learn actually how do I work with my suppliers and how do I get the data to be able to file the quarterly reporting in a compliant manner as beneficial for you as a company. But it needs to be done for each quarter, for each supplier, and for each type of products imported. So it is something we strongly suggest. Use the reporting period to get familiar with it and to be well prepared by the time that you need to be, that there will actually be financial impact. So then we can go to the next slide. And then I think I will hand it over to Alexis, my colleague.
Thank you, Claudia. Good morning, good afternoon. I'm Alexis. I'm leading the sustainability team for the tax, legal and people practice out of Belgium, Brussels. Claudia just mentioned multiple times Brussels. It's a good way of waking up. I will briefly discuss with you what will happen as from 26 and some no regret actions and why we wanted to clearly already see what will happen in 26. Well, we have a transition period, which is a kind of pilot, let's say this way. So it's important to understand what is the end game scenario. So it will help the businesses, the managers to build their roadmap and what are the stakeholders I need to look into it. So it's important to understand the end game to really see what should we do between 23 and end of 25. So if we go, what will happen in 26? And there, if you are already a company based on ETS, European Emissions Trading System, well, in this case, you will see some similarities that will connect with as from 26. But you will have a report, an annual CBAM report to file. We already discussed that. It will be in May of each year. So the first report for 26 will be in May 27. But as from 26, that's where the company needs to start purchasing CBAM certificates. So really, the actual cash out cost will be for the company as from January 26. Now, you purchase those certificates, you report, there is a verification of the data that will be also implemented. And then if the company has purchased too much certificates, the company must surrender them, so sell them back. This is slightly different compared to ETS. So if you have a company today on ETS, you know that you can actually on the auction system decide if you want to keep them, you can carry forward, you can have actually a portfolio management around the ETS. With the CBAM certificates, this will not be possible. You must sell them back. So there is no portfolio aspect to manage there. However, we directly see a number of questions. You will purchase a number of certificates. You will do your closing of your books end of December, for instance. Yeah, of course, you will need to report a stock of certificates. So there we see already some aspects of the ETS coming back. There is also a difference is that compared to ETS, when you sell the certificates back, the regulations clearly say that you sell them back at the price of the purchase, so no gain, no loss. So that's an important one. However, what is still unclear today is about the value, because the company can purchase the certificates at different time, at different price, because the price will be based on the ETS. So basically on the stock exchange, on the market, and buying a certificate in January or in May or in October may lead to different values. So there we are still waiting for the implementing acts to see it will be an average of the purchase price, or it will be a kind of last in, first out, LIFO, FIFO method. This is not totally clear yet, But clearly the purchase will be and the price will be based on a weekly average. However, what is not clear is about the LIFO or FIFO aspect of that. So this is an important one because you already see that there is a timing difference. And this leads to many questions that maybe management need to consider. And on the next slide, we have mapped a number of no regret actions. Well, we know that we have then this 3 years time of this transition. We all have to learn. And we also know that there will be a number of challenges. Claudia, Oliver already mentioned the fact that the default value or the embedded value, we're talking about greenhouse gas emissions here, which is complex matter. But my question to you is, for instance, if you're saying you're a company making a lot of efforts to have a greener products, to really work with R&D or with manufacturing to decrease your carbon footprint, well, you will be actually very negatively impacted because the default value, again, it's a benchmark of the lower company. So basically, really nasty results, which is a bit contradicting. And maybe it's not the matter here, but from a tax policy standpoint, there is a kind of contradiction here where companies that try to make an effort actually will need to have higher burden, because if you pollute a lot, maybe it's better to simply go for the default value. So this is a disconnect, but let's use this transition period to test, to make sure that your greenhouse gas emissions report are solid, because this will be used for tax purposes in the end. And we should not forget that there are consequences if it's not solid. So in terms of no regret actions, that's the way we call them. Clearly, there is an important aspect is that I like to use a Titanic model. You are on the ship, you see very far away the iceberg, but you don't know if it's a big iceberg or not a big iceberg. So the purpose of the first one is to really try to see and put a spotlight on this invisible piece of the icebergs. How many goods do I have? Is it material? Yes or no? Are we talking about 25,000 euro or are we talking about millions of euro? This is clearly something that the tax function needs to know, but then it's not enough. It's also to make sure that you map your stakeholders in-house, because finance will be impacted. We just talked about the closure of your books end of December. You will have some consequences. We are talking about pre-financing, working capital, again, finance. If we're talking about supply chain, if we talk sustainability teams, you need to get the greenhouse gas emissions report. So it's basically not a topic for only one person in the company. So mapping the stakeholders, it's an important one. And of course, data. Data will be also a critical one. This is where we see a lot of clients actually already start sweating a bit to collect the data and actually what the data means. So this is something that when you look at putting the spotlight on the invisible piece of the iceberg is not only on the data and not only on the goods, it's really also to think about other stakeholders. So the action number 2 is clearly focusing on the data. There is a data exercise that needs to be done. And for some companies, it will be a small hill. For others, it might be the Himalaya trail. So I think also this is also important that you need to step back and what is available, what is the gap analysis in terms of data. Maybe you need to prioritize things. There are a number of HS codes that you will see. Well, the materiality is on maybe the Pareto rule. We focus on the 80% first, this kind of things that you need to really have a game plan on who will collect the data, how and when. But what is sure is that the first reporting period starts in October 23. That's actually the very nasty piece because it leads to companies quite limited number of time to actually develop that game plan. The third one is about the legal aspects of CBAM. This is something that may have actually also a longer term impact. But when we talk about commercial obligations, in the B2B context, we help a number of companies. For instance, we're saying, well, can you shift the CBAM cost to your next player in the value chain? So it's a matter of reviewing your contracts with your customers, maybe as well with your suppliers, because you are maybe the importer today, but maybe if you have a number of contracts that will that will mature soon. Maybe it's a good way to renegotiate a number of commercial contracts with your suppliers that you are not anymore the importer and you shift the hot potato to someone else. So this is not something that you can do overnight. This is something that you need to start looking again with other stakeholders in the company. It can be your legal team, procurement team, it can be your sales team. So again, you see the number of stakeholders that can increase. So this is something that you need to think about, to identify in terms of actions. And also, Oliver mentioned, we expect the list to move on in the future. There is clearly, we know that those products contain also greenhouse gas emissions. So if we simply put ourselves in the shoes of the policymakers, as a prudency principle, we should also see, and if you do this data gathering exercise now, my recommendation is to maybe see also those products that might be subject in the future, because maybe that might be even bigger in terms of materiality. So why not already look at those data points that have maybe a much longer term effect? On the CBAM declarant, I think that was the last point that I wanted to mention, and that was mentioned by Claudia. It's not only internal stakeholders, it's also external stakeholders. When we talk about the notion of CBAM declarant, this is something that now on a national level, we will see a number of forms to pop up to really put who will be the name of the company that will be the CBAM declarant. But there, having your supply chain roadmap ready, can you outsource or insource some tasks? This is important. However, if you discuss with customs brokers, there is also already a scarcity. So we also expect a number of tension pressure points to increase there. So be ready as well to negotiate, discuss with your customs broker in the future. I leave the floor to Niels to wrap up now.
Thanks, Alexis. And before we come to the conclusions, just maybe also in the chat some small explanation on ETS and CBAM, where the basic concept is that once ETS free rights for ETS companies in Europe will decrease, the CBAM price will increase. So they are completely linked, and the whole idea is to have a level playing field. So CBAM is a level playing field instrument where the Commission tries to protect the European market against imports from countries with a different carbon price. And one of the other elements there is that there will also be a credit for comparable carbon prices levied in other territories that you could also take on board then as part of the CBAM process. And we've already seen in the recent months that the various countries are looking into the possibility of coming up with their own carbon pricing mechanism. And that's actually one of the cornerstones of the policy that the Commission is running. They would like to see a global carbon price. And so CBAM is not meant to support the European economy with additional revenue, but intends to create a level playing field. And we'll see obviously friction, and that will not be in place immediately, but that is the end game. And that's, I think, to Alexis' point, that's why it's really important to understand the carbon intensity in your supply chain, because one way or the other, whether it's going to be subject to CBAM or it's going to be picked up by carbon pricing in other jurisdictions, over time you will see that carbon will get a price globally. And CBAM is just I think a cornerstone in this policy, but we'll see much more carbon pricing across the globe. And obviously then you need to know where the carbon sits in your supply chain. And the other point that Alexis made on alternatives, and we already see that there's increased demand for example, green steel or less carbon intensive products. And obviously when CBAM kicks in and gets a price, you will see more demand of that. So being a first mover there, or at least knowing what you're up for, is really important. And based on what we have now today, you can already start that assessment. So I think that's also, although some of these dates seem to be far away, I think if you want to change your supply chain, it's probably a good time to act. And I don't know, Jonathan, were there any other questions we should?
Yeah, there's a few other chat that would be good. Maybe just whilst you're talking about carbon pricing, a question from Dylan in regards to the interaction of the phase out of free allowances under the EU ETS and the phasing in of CBAM. Do you just want to comment maybe on how those mechanics are playing out?
Yeah. So what I just said, so those should be directly linked. So whatever product you're looking at, if there's a free allowance in the European environment, CBAM will have a similar mechanism, and as we start to phase out free rides, the CBAM price will increase. And this is also to address WTO concerns. So there's a couple of countries that have already lodged complaints with the WTO, including China and other jurisdictions. And this is exactly why the Commission is trying to match those as much as possible.
And if I may add one point for this question, so there is also a snowball effect on the ETS price because it's a cap and trade system. So there is a cap that EU is imposing, and the cap is of course linked to the price. And we see a number of new industries going into ETS. So there is end of April the decision of the EU to also put maritime transport, aviation in the ETS. So basically, we see that more companies will need ETS, but the cap remains. So, you know, if you also look at the sustainability reserve, there is also more stock to put in the reserve. So really, the EU Commission has the game plan to increase the price of the carbon tax. And it's also driven by the fact that if you look at some studies, economic studies, they were saying that showing that for the last 20 years, actually the price of carbon was actually quite low and maybe artificially low. And the purpose is to correct that measure from a gradual perspective, and gradually companies you should not expect a decrease in the carbon price.
And then there's another few questions, so maybe I'll direct this one to Claudia, and there's probably two parts. So there's a question from Eden in regards to what extent do we expect the CBAM to impact supplier screening and selection through the value chain? But also perhaps just in considering that, Claudia, there's a few other questions from Kelly Lynn and Manish around the entity that is exporting into the EU and whether they would need to be registered. So maybe if you want to pick those two up.
Yes, to start with the last one, at the moment there does not seem to be a reason for the exporting entity to be registered. It will be a burden that will be only on the importer. So what it will be, the importer will apply for the CBAM EORI number. They will import the products and they have the obligation to do the reporting. The correctness of the data, and I think that is linking directly to the first point, in the legislation, they are talking about a verificator. So that is someone that is going to audit basically the data. The question is, where can this party be established? Will it be an EU party? Is it possible that a company, for instance, in China or India or wherever, can be obtaining this status? And if so, to which extent are you allowed to rely on the work that they are doing? Likely, the idea behind it, of course, is you can rely on it. But I think that the best comparison can be made with preferential origin. I don't know whether all of you know it, but if you produce something in a certain jurisdiction and we have an agreement with that party, for instance, with Vietnam, we have a free trade agreement. If products are originating from Vietnam, you can apply a reduced import duty rate in Europe. That can only be done if the supplier in Vietnam has correct data at file, can be audited by the local authorities if needed, but all the risk is with the importer claiming the reduced rate. The same will apply for CBAM. You have to have conversations with your supplier on the correctness of the data. You have to have conversations. Do you know why I need the data and what is meant by direct and indirect emissions? So if you look at EU legislation and EU case law at the moment, what you see is that in all cases, because you as an importer will benefit from you will benefit if the direct and indirect emissions are as low as possible. The EU authorities will hold you as an EU importer responsible for the correctness of all the data. Whether there will be something like good faith because you use a verificator that is appointed by the EU, whether or not or allowed by the EU, whether or not it will be an EU company or a foreign company going forward, what we don't know yet. Always, I'm convinced at least, that the authorities will come to the EU importer that took the responsibilities for completing the data from a CBAM perspective. So I hope that answers the questions.
Thank you, Claudia. And I think there's maybe one more from the group, which I'll hand over to Ollie. So the question comes from Kelly, and just a bit of a clarification for the data required for CBAM. Is it scope 1 and 2, each shipment in each quarter? And it might be worthwhile just touching on the exceptions is there as well.
Sure.
Yeah.
Sorry, go ahead, Claudia.
No, please go.
Okay, good. So no, the question is about how you organize yourself, and I think that's a question also from a legal point of view, and this will likely also need amendments in the procurement agreements that you have with your suppliers. However you organize yourself, the reporting itself, it's like a summary declaration. So the data that you finally submit to the authorities will be like a consolidated report covering a quarter during the transitional period, and then as of 2026 an annual report. So this is like really a summarizing report of all the data that you collected from your suppliers, and of course also on the volume, probably on the import goods into the EU that you filed in the customs declaration. And it's really like an internal organization thing how you will do that. In our view, it's probably best to collect these on a transactional data or on a transactional level, because when it comes to reconciliation at the end of the year, and also when you need evidences from your suppliers, and this is something we unfortunately don't yet know how these evidences will look like in detail. It's really like an alignment between the importer and the supplier, how you want to submit these informations that you need in order to comply with your reporting obligation. So there's no really like a guidance on how to do that. But yeah, as said, I don't know, Alexis, Niels, Claudia, do you have to add anything? But in my view, this is really like individually to be determined on how this will fulfilled.
Yeah, I think that is. I think that's a fair statement, and I think this will also, what I said previously, it's quite unique that they have like a phase-in period where you will have the reporting, but you don't have the payment obligation yet. And knowing the authorities, or at least working with legislation already for a long time, what you see is that when you have new legislation, it is also a bit trying what is for companies to understand the workload that is on them, and whether it actually can be, whether it's possible to work with all the legislation, but also for the authorities, because this is a new way of reporting for them as well. They don't know how it will work out in practice. And if they have a lot of challenges, or have a lot of, if they experience challenges, or they have the feeling they are missing data, or they have too much data to properly monitor the impact of CBAM, then likely there may also be some changes, or they will issue guidance documents to give more clarity on these specific points, because this is something that we will learn over time, to be honest.
Thanks, Claudia and Oliver, Alexis, and Jonathan. I think we're running up to the hour, and we want to give everybody a head start at 9 at least, who's dialing in from Europe. So just very briefly, a couple of conclusions. I think we made very clear that CBAM is approved and reporting is there starting in a few months' time. So this is really soon. And there's a few steps that can be taken to quantify the impact and also the impact on your business and supply chain. And I think to a large extent that that is around data and understanding what you bring into the EU, but also understanding your legal position, the 3 steps we discussed. And I think, and this is also relating to a question that just came in. There's a bigger trend in carbon pricing and sustainability reporting. And obviously this is only a start. So you will have more products covered by CBAM, but there will be more carbon pricing around the globe. And indeed, as Robert was asking, CSRD will eventually also pick this up. There's not a separate topic as such and not a direct link, but CSRD is also part of the EU Green Deal. It's the reporting part, obviously. But you can imagine that once you are significantly affected by CBAM, this is something to report on, and that may or may not impact the end reporting you will be faced with under CSRD. So with that, I think thanks very much for joining us. This was the first in a series. Once we have been enlightened by the further background that the Commission is still owing us, we'll report back in. We'll have some further deep dives on CBAM, and those sessions 2 and 3 will be announced shortly once we have the new legislation in. Any questions, remaining questions, we'll pick up what is in the chat. But if there is anything, reach out to either your local contacts or to one of us. This CBAM will apply in 27 member states, so this is clearly something that will be affecting anyone who brings goods into the EU. Well, thanks very much for joining, and have a nice day.
Thank you. Bye-bye.
Thank you.
Thank you. Bye.
Thank you.